What if I told you there's a company that earns money every time someone swipes a card, without ever taking on any debt or lending a single dollar? This company processed over $3 trillion last quarter alone, and chances are you used its services today without even realizing it. Today, we're diving deep into Visa, one of the most powerful yet misunderstood businesses in the world. Founded in 1958, Visa runs a global payment network that processes credit, debit, and prepaid card transactions. Unlike banks, it doesn't issue cards or extend credit, but earns fees for transaction processing, including authorization, clearing, and settlement. These fees are typically a small percentage of each transaction. Visa also collects service fees from financial institutions based on card usage, and generates revenue from cross-border transactions involving different currencies. Visa currently offers a dividend yield of 0.67%, slightly below its 5-year average of 0.73%. The stock is trading at a price-per-earnings ratio of 29.2, compared to its 5-year average of 27.6, and well above the sector average of around 12. Based on valuation models, the expected fair value range for Visa shares is between $299 and $365, while the stock currently trades at around $351. This suggests that Visa is fairly valued at the moment, neither significantly overvalued nor undervalued. Visa currently pays an annual dividend of $2.36, distributed on a quarterly basis. The next dividend payment is scheduled for September 2nd, and to be eligible, investors must own the shares by August 11th at the latest. Visa's most recent dividend increase was 13.5%, compared to a 5-year average growth rate of 15.4% and a 10-year average of 17.7%. The company has a strong track record, having paid and increased its dividend every year for the past 16 consecutive years. Both the earnings payout ratio and free cash flow payout ratio remain consistently low year after year, despite Visa's aggressive dividend growth. It's no surprise then that both earnings per share and free cash flow per share have been steadily increasing over time. While 2020 was a weaker year due to COVID, the company has since returned to form, delivering EPS growth of around 15% annually. The sales growth chart also reflects this strength, showing consistent growth in the 10 to 11% range. Visa continues to buy back its own shares, which is something long-term investors highly value. And because total sales are also rising, the company is able to raise its dividend by approximately 15% annually without meaningfully increasing payout ratios. Both return on equity and return on invested capital are not only high, but trending even higher, consistently exceeding the 10% benchmark, which is very encouraging. Furthermore, operating margin and free cash flow margin have remained well above expectations over the past decade. Visa's management also handles debt extremely well, with the interest coverage ratio comfortably exceeding standard benchmarks for the past 10 years. Visa currently offers a starting dividend yield of 0.67%, and its most recent dividend increase was 13.5%. The company holds a AA- credit rating, which is considered very strong, and its dividend appears to be extremely safe. Based on current valuation, Visa seems to be fairly priced, especially for those with a long-term investment horizon. In the short term, it's clearly a growth stock, but over a 20-year period, with consistent dividend increases like these, investors who start buying now could receive a substantial yield on cost in the future. In my view, Visa still holds massive long-term potential. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions, and never base a financial decision solely on the content of this video. Now let's go through the company's latest quarterly earnings report together. Net revenue, $10.2 billion, up 14% year over year. GAAP net income, $5.3 billion, up 8%. Non-GAAP EPS, $2.98, up a massive 23% year over year. This shows strong operating leverage, especially when earnings outpace revenue. Payments volume up 8%. Cross-border volume excluding intra-European Union up 11%. Total processed transactions up 10%. That's incredibly healthy growth for a company Visa's size. Cross-border in particular is crucial. It has higher fees, and its growth points to strong travel activity. In the United States, credit card usage saw 9% growth, while internationally, debit volume jumped by 11%. Visa's diversification across regions and product types helps smooth out macroeconomic risks. Total cards issued, 4.8 billion, up from 4.5 billion. Transactions, over 83 billion in the third quarter. These are massive numbers. The moat is real. Banks and fintech simply can't replicate Visa's scale overnight. Operating expenses rose 35% on a GAAP basis, but only 13% on a non-GAAP basis. Litigation, $615 million. Marketing and personnel expansion. Ongoing tech investment. Adjusted figures show cost discipline, and litigation provisions were one-offs. Free cash flow, $6.3 billion in the third quarter. Returned $6.0 billion to shareholders via buybacks and dividends. That's 95% of free cash flow returned. Visa is a cash cow, and it's rewarding shareholders generously. Data processing, $5.15 billion. Service revenue, $4.33 billion. International revenue, $3.63 billion. Client incentives, negative $3.97 billion. The negative incentives reflect discounts to big banks and partners, but overall gross margins remain extremely high. Fourth quarter revenue expected to grow in the high single to low double digits. Earnings per share growth forecast, high single digits to low teens. Nothing groundbreaking, but very consistent, especially in uncertain macro conditions. So, is Visa still a buy in 2025? Fundamentally, it's one of the most profitable, defensible business models on the planet. The only real threat is valuation, not execution. If you're looking for a high-quality compounder with global scale, high margins, and robust free cash flow, Visa deserves a spot on your watch list. Thanks for watching, and if you found value in today's video, give it a thumbs up and consider subscribing for more smart, long-term investing ideas. Stay patient, stay consistent, and keep building your path to financial freedom. Until next time, take care and happy investing.